Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, September 13th. This will be a technical analysis breakdown. So if you are somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple clarifications. Number one, the candlestick you see there will be moving around. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, AXLA. And bigger mover today, this one has finally crossed up out of that penny stock area and into the dollar range. So, you got to think that it's probably brought in a new set of eyeballs of people that want to at least see a stock trading at above $1 or more. So let's get some updates made. First thing I'm going to do is just delete that line out of there. Sure, it still pertains, just not really relevant. And from a presentation standpoint, I don't want to risk causing confusion because there's clutter and lines everywhere. So let's try to keep this as clean as possible. First update, though, comes about based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So moving forward now, $1.07 going to be that newest area of support. From an overarching level, though, in terms of what make the chart make the strongest from a bigger picture point of view, that's where the purple line comes into play. So yes, best case, the price is able to hold above $1.07. But if the price drops below $1.07, doesn't mean the chart's destroyed or anything like that, because again, from an overarching standpoint, it's all about that purple line there, the 50-period moving average. In terms of levels of resistance, nothing fancy or straightforward here. Literally just a question of where did the momentum stop today, where did the party stop for the bulls, and that was right up there at $1.40. So keep an eye on $1.40. It's really just as straightforward as that. You can see several times got up there and just could not quite push through. But all in all, anyway, look at it. Higher highs, higher lows. The price is now no longer a penny stock, so definitely a bullish looking chart. Next one, ticker symbol WE, and bigger mover today with the volume and a lot of eyeballs seemingly watching this one here, and nice little pattern here as we head into Wednesday. First level I want to point out, though, is going to be that main area of support. So if you like to play more so pullbacks, then keep an eye on that pink line there, which is the 200-period moving average. You can see right there, found some support, and then found some support more right there. So if there is another pullback, does that mean that once again that pink line is going to provide support? Of course not. There are no guarantees. But is it plausible to think that that area could provide some support? Yeah, it absolutely is, given that we have evidence of it happening before. So if you like to play more so pullbacks and care about supports, then definitely keep an eye on that pink line from that angle of things. In terms of areas of resistance, two main levels. First level is just basically the top part of this little miniature consolidation that's occurring right now at 575. But as you can see, as I speak right now, and this is why I like to do these when the markets are open, you can see the price is basically knocking on the door right now. So that seems very, and maybe we'll even capture it right now live on video, that the price breaks through that area. But if it does, then the next key level to watch is just going to be the highs from up here. Again, very basic logic. Where did the party finally stop for the bulls today? And that was right up there at $6.72. So that'll be resistance area number one. If that level can be broken, then keep an eye on resistance area number two up there. Next one, COSM, and overall, interesting afternoon here. I got very crazy. You can see this 30-minute candle right there. Big move up. Next candle, continue to run upwards, but it's now dropped down quite a bit. Although from the big picture point of view, everything is still fine. Now, I realize that if you're a day trader and you bought right there and your plan was to buy and sell within 2 minutes, well then yes, from that standpoint, things are looking pretty rough. But assuming you care about the bigger picture point of view, even with the big pullback here, the price is still above the two main moving averages, the 200-period moving average and the 50-period moving average. So that's what is leading me to say that the overall chart is still hanging in there. So keep an eye on those levels from the support side of things. In terms of areas of resistance, key level to watch right there at $1.43. So $1.43 main area of resistance if this does try to curl around. And I don't know, maybe some people would call it a cup and handle. I can see where they're coming from. So there's the cup. Let's try that again. There's the cup, and is this the handle here forming with a potential move to the upside? I completely understand. If like, no, Clay, that's a bit of a stretch to call that a cup and handle. Fair enough, but I can also see how people might see this as kind of a variation of the cup and handle right there. But overall, crazy move today, good volume. We'll see if the crazy can continue into Wednesday. Next one here, CGC, and this is trickier to talk about from a presentation standpoint because, as I've mentioned already on a previous one, it really does depend about your perspective going in. And what do I mean by that? Well, if you're a day trader, flipper, scalper, and you bought right there and your plan was to buy and sell within 10 minutes, well then yes, from that standpoint, the chart looks really, really bad because there's no need to deny it. The price from where it was up here, I mean, that's a good size pullback. Now, it has reached this range right here where there's been some consolidation But now this is where you start to factor in, okay, but what about people that care about the big picture point of view? Well, from the big picture point of view, you have to ask yourself, well, what was happening before this big pullback? And you would say, well, you had this big upwards move right here. And now in all actuality, what I've drawn is a bull pennant pattern. Again, I fully understand that if you're a day trader and you bought right there, you don't care about a bull pennant pattern. This is irrelevant to you. But again, I'm trying to differentiate that I'm making these comments now based on a big picture point of view. So yes, today the price did pull back, but overall, assuming you do care about the bigger picture, the price is still in an uptrend. It's got a bull pennant pattern. So from that angle, everything is still just fine, and the overall trend is still in the bull's favor. Next one here, AMC, and we're finally getting some nice upwards movement here, which I know you longer time viewers probably get a little sick of me talking about AMC, but as I've been talking about, these things can give and have quality bounces, and right now, good quality bounce. I mean, to think that it was hovering down here around this low 7s, and now it's made a move up here to the very low 8s. Hey, that from a percentage standpoint, that's a nice little move there, but we'll see if there is indeed more. So it is showing some signs of upwards movement. Yes, there is a pullback right now that is occurring, but again, from where it was not that long ago, in all actuality, kind of a little miniature bull flag pattern there. But what I want to emphasize and kind of just point out now, because you got to think a lot of people are probably going to be watching this area right here at this gap close location at $8, and let's just call it 10 cents. You can see right there, there's a little miniature gap. It did close right there, and as expected, it did provide some resistance. But if this thing can curl back up and get to that level and then push up through it, does that guarantee anything? No. But is it valid to think that, hey, you know what? If that breaks through there, could that very well create additional buying pressure? And to me, that is a very valid question that should be asked. So right there, keep an eye on that 812 mark if it can curl back upwards. If you like to play more so bounces and you're thinking, I think this thing is going to try to roll back over, then the key level still remains at 705, where you're looking for some sort of potential double bottom play where you get a bottom right there, and then a bounce back upwards. But overall, AMC showing some signs of life, but let's see if they can start to build some higher bases. Real quick, want to take a break and personally invite you to get signed up for this free live online class that I'll be offering here very soon. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live online class. If you're watching on YouTube, there's a link down in the description box, or if you're watching at my site, there's an area right there on the webpage you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up for the free live class. Next one here, ACB, and like some of these other ones, I'm going to go through it very quickly because you've already heard me give this speech, but this is one of these it depends type situations. Day traders who bought up there are going to feel much better or much different than those people that care about the bigger picture point of view. So yes, the price did indeed pull back here, but when you consider the bigger picture and consider that even in the near term, there's this little uptrend line right there, and then you consider what happened before the, this wedge right here, you have this big moving up right there, you have yourself another bull pennant pattern. So again, near term, I don't know, maybe this chart looks really, really bad for you depending on your game plan, but assuming you do care about the bigger picture point of view, then overall the chart's just fine with the current bull pennant pattern. Next one here, TSLA Tesla, and started off the day very, very impressive. Big opening 30 minutes you can see right there. And then from there, the bears just basically took over. Now, to be fair, the NASDAQ as a whole had a rough day today. So it's not like the NASDAQ was booming and then Tesla was behaving like this. So to give a little bit of context, I'm going to go ahead and get rid of that level there. That was more so for my just own curiosity. But the one level that I did talk about in yesterday's video was this 266 mark as an area of support. I mean, check this out. The power of charts. Are charts perfect? No. But are they worthwhile? Absolutely. But I mean, look at it. Price pulled back and dropped and dropped and dropped. And then, oh, look, right where it started to go sideways, right there at that line. So I'll turn that into a quick little advertisement. Go get signed up for that free class because, charts really are a very valuable tool. But point here being 266, definitely going to remain that very important near-term level of support for more of an overarching area of support. Keep an eye there on that purple line there, 50-period moving average. If the price does try to curl back upwards, nothing new here to talk about. Still all about that area up there at 275. The red line right there. Now, to be fair, yeah, the price did actually push up through there, but as in terms of maintaining the break and maintaining that momentum, failed miserably as the price not only dropped back below that level, but then continued to sink all the way back down to that area of support. So 275 remains that key area of resistance. Next one, AAPL for Apple, and Apple, after having a nice little bounce, is starting to roll right back over. And while you can't say it's completely at its lows, and I'll point that out, the lows being right down here. Actually, you can't even see that. Let me bring that over. There we go. The lows being right here at 173.75, or excuse me, 173.45. Change that to green right there. It is certainly getting well within the area, but for those of you that do like to play that double bottom pattern, then you could be getting a chance here if on Wednesday the price does roll back over, then at that point it becomes a very, of course, as always, no guarantees, but it becomes a very rational scenario to think, okay, is this going to be double or bottom number 2? Because we already had that first bottom back in that area right there. So if you like to play those sorts of scenarios, then definitely keep an eye on that 173.45 mark. In terms of areas of resistance, 2 main levels to watch in the very near term. Going to need to watch that purple line there, 50-period moving average, which you can see right there is essentially what rejected the price back down. But even if the price does get above there, you don't want to get overly excited because not that far away, you then have the pink line up there, the 200-period moving average that you'd want to keep an eye on. But all in all, rough day here for Apple. It's approaching potential lows, and at that point, does it double bottom or does it go even lower? There's going to be a lot of people watching that 173.45-ish area, so grab your popcorn and let's see what happens. Next one, AMD, and a level that by no means is this a great discovery. You got to think that there's going to be a ton of people watching this area right here at the 103.20 mark. And I make the comment about a lot of people watching this area because when a lot of people are watching the same level, and let me take a step back. Why would a lot of people be watching? Well, you got to note, and maybe you even notice it. But I mean, price came down here, found some buyers, nice bounce. And then opening 30 minutes, price came down there. And again, the power of charts. Found some buyers, and then a nice bounce. So it becomes very rational to think that there's probably other people that are thinking, okay, well, if the price comes down here, I mean, it's done it twice before, why not another bounce? And call it a self-fulfilling prophecy, call it whatever you want. That's what can tend to happen when a lot of eyeballs are watching the same thing and wondering the same thing. And in my opinion, at least, it's very valid to think that there's probably a lot of eyeballs out there wondering, can this thing roll back over for a potential, triple bottom type setup? So 103.15 going to be a very important level of support any way you want to look at it. In terms of areas of resistance, the level that stands out to me right now going to be this resistance trend line right there. So keep an eye on that, and we'll see how the price behaves if it can push up forward. Although in the very, very near term, you do have both these moving averages. You have the pink line and the purple line basically smashed right on top of one another. So that area in and of itself is going to provide what I would guess a pretty annoying area of resistance. But even if the price does break through there, again, I wouldn't get too excited because not that far away from these moving average resistances, you then have that trend line resistance. So moral of the story, if the price is going to make a move upwards, the bulls better bring their A game. Next one, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market as a whole is going to rise, this one will also rise. It just allows you access at a much lower price point, which makes it a very popular ETF. And I don't want to oversimplify this, but sometimes it's just as simple as it is, and no pun intended. But all eyes is going to be on the 200-period simple moving average because very famous level. Last time the price was down there, you can see it did provide support, did create a bounce. And as I speak right now, the price is once again at that level, which again brings about a very valid question. There are no guarantees, so nobody can say that for sure guaranteed the price is going to bounce. But it is at least worthwhile to throw out the question, well, is it going to bounce? Because it has before, so is this year going to repeat itself once again? And that's going to be a big dynamic. And then just from an overarching standpoint, if it does not bounce and the price breaks down through there, then at that point, you got to throw out the question, okay, just how bad is it going to get? How much are the bears going to take over? And is the NASDAQ really going to start to roll over that much more? So very pivotal area right now at that 200-period moving average. And, whether you're long or short, or whether you're bullish or bearish in terms of how you want to factor that level into a trade plan. My core point here is that there's going to be a lot of people watching that level and factoring it in various ways, so you can get some of those self-fulfilling prophecies. If the price does bounce, then overall $42 is going to be that key area of resistance. Yeah, you have that level. In fact, I'm actually just going to get rid of that as it's irrelevant right now. But $42 is going to be that main area of resistance if there is any sort of attempted bounce back upwards. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to go get signed up for that free training. It'll be very soon, Thursday, September 14th at 7 p.m. Eastern Time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit that like button, leave a comment down below. Even if you just say hi, tell me what you traded today, give me your watch list for tomorrow. But those two things help out the channel. They communicate to me that you enjoy. And as long as I know you are enjoying, I'll continue to put in the effort to get these top 10 videos out to you. So please do those two things, and I thank you in advance. And definitely go get signed up for that free class. So everybody, thanks for watching. Take care. Have a good one.